Are you a farmer? Do you need money? Are you looking for ways to help fund your farming business? Does your farm need a little extra cash? In this video, we will be discussing emergency farm loans. Let's jump in. This is Business Media TV. My name is Mimi, the business advisor. On this channel, we advise business owners on how to start, grow, and sustain their businesses. If you're new to this channel, please consider subscribing to our channel and joining our growing community. The next section, we will go into the details of the emergency farm loans. These are the details of the emergency farm loans. When a tornado, flood, or drought strikes, or a quarantine is imposed by the Secretary of Agriculture, or when other natural disasters occur, FSA's emergency loan program is there to help eligible farmers and ranchers rebuild and recover from sustained losses. It's triggered when a natural disaster is designated by the Secretary of Agriculture, or a natural disaster or emergency is declared by the President under the Stafford Act. So the loans help producers who suffer qualifying farm-related losses directly caused by the disaster in a county declared or designated as a primary disaster or quarantine area. For production losses, a 30% reduction in a primary crop in a designated or contiguous county is required. Losses to quality, such as receiving a 30% reduced price for flood-damaged crops, may be eligible for assistance too. Let's just go into the frequently asked questions so we can get more details. So here it just says, all FSA direct loan applications require the same basic forms. Emergency loan requests have two additional forms: the certification of disaster losses and lender verification that commercial banking assistance was denied. When you meet with your FSA County Farm Loan Program staff, you'll be asked to complete additional forms based on applicable loan program requirements for the loan type. These are the frequently asked questions. The loan funds may be used to restore or replace essential property, pay all or parts of production costs associated with the disaster year, pay essential family living expenses, reorganize the family farming operation, refinance certain non-real estate operating debt. So the eligibility requirements are this. In addition to the general eligibility requirements all loan applicants must meet, there are some additional criteria unique to the emergency loan program. The loan applicant must be an established farmer and either the owner, operator, or tenant operator of the farm at the time of the disaster. Loan applicants must intend to continue farming. Loan applicants must get written declarations of credit from organized commercial lending institutions, and it gives you the detail. If it's greater than $100,000 and less than $300,000, only one letter is required. If it's more than $300,000, 2 letters. And if the loan amount requested is $100,000 or less, the requirement is determined on a case-by-case basis at the agency's discretion. Loan applications must be received by the agency no later than 8 months after the date the disaster is declared or designated. So there is a time limit for that. The loss and or damage to the farm operation must be directly attributed to the stated reason of the disaster declaration. Crop insurance is not required at the time of the loss, but will be a requirement for the coming year in order to receive a loan. If you've been getting value from this video, please consider liking this video and subscribing to our channel. The maximum loan amount for the emergency loan is $500,000, so you're limited to the actual amount of production or physical loss caused by the disaster. They are based on the amount needed to replace lost property for physical loss, such as stored grains, equipment, and livestock. Repayment terms. These are based on the useful life of the security, a loan applicant's repayment ability, and the type of loss involved. The repayment schedule will require at least one payment every year. Emergency loans for annual operating expenses must be repaid within 12 months and not exceed 18 months if an extended term is necessary for the production cycle of the agricultural commodity. Interest rates are calculated and posted the first of every month. The interest rate charged is always the lower rate in effect at the time of loan approval or loan closing for the type of loan wanted. It's just additional information. So you're just encouraged to visit your local office or USDA service center to learn more about the programs and the information you will need to complete the application. Click on the local office or USDA service center to see what you will get as far as service. So if we choose a state like Ohio, for an example, it will take you to the Ohio state. It gives you a few details of what they produce, and it shows you the coronavirus food assistance program too. And it says, are you a farmer or rancher whose operation has been directly impacted by the coronavirus pandemic? USDA is implementing Coronavirus Food Assistance Program 2 for agricultural producers who continue to face market disruptions and associated costs because of COVID-19. The CAP 2 applications will run from September 21st through December 11th, 2020. They have a call center for producers who would like additional information or support with the CFAP2 application process. Thank you very much for watching, and we'll see you in our next video. Bye.